All right, well, let me go ahead and do sort of a 10,000 foot view elevator pitch on my accounting skills and knowledge. Of course, we know that assets equals liabilities plus equity. Assets minus liabilities gives us our equity. We know that cash comes in, we know that cash goes out. So, from the moment it comes in, stays, and leaves, let's be as detailed and as efficient as heck as possible with it. When I do my books, it is important for me to get to my recurring items as quickly as possible. Understand those. The muscle memory, get to a muscle memory with that because, with Excite, it was inventory. With SGI, it was, donations. You would get a lot of donations. You would have limitations, non-limitations. Get to the muscle memory of those recurring items because the new stuff, the emergency stuff, is going to come in and is going to take some time, and you don't want both to suffer. What's also important is that we have constant communication with our owners or our supervisor, who is ever best accessible, whatever the chain of command is, and figure out what new is coming down the pipeline. For every business decision, it's going to affect accounting, most likely affect accounting in some way. So, something as simple as setting up a utility payable that needs to be paid automatically because we get a discount. Well, we need to make sure that we keep track of cash management and that we have enough extra funds every month to take care of those automatic withdrawals. Throughout our month, we want to understand what our transactions are, what we're debiting, what we're crediting. If we get a bank loan, I debit cash, increase cash. I credit liabilities, increasing liabilities. When I pay on the loan, I debit liabilities, decreasing liabilities, and I credit cash, decreasing cash. Debit interest expense, that bad boy goes on the income statement. Thankfully, at least the accounting software systems I work with bundle up all of our general journal items into our general ledger. So we see all of our cash items for that month, AP, AR, payroll, and so forth and so forth. We then want to reconcile our bank statement to our cash account, then reconcile our trial balance to our general ledger. If I have 10,000 on the debit side and general ledger for cash, and 5,000 on the credit side for general ledger in cash, well, that's going to be 5,000 debit side for trial balance. Then that's going to be our unadjusted trial balance. We want to do adjusting entries. Do we have depreciation? Something as simple as deferred revenue, part of the GAAP, generally accepted accounting principles, which is revenue recognition, recognizing revenue when it's earned. So when we have deferred revenue, we get revenue, but it hasn't been earned, so we debit cash and credit deferred revenue. Then when we recognize the service, we debit deferred revenue and credit income. We do our adjusting entries. We have a final adjusted trial balance. Then we want to make sure the period and the month is closed, no new entries into the system. And then we want to start running our financial statements, income statement, balance sheet, cash flow statement. Then we want to do our analysis. Now there's a plethora of ratios, plethora of analysis, but the common ones, the sort of basic ones, is we have our liquidity, making sure that we can cover our short-term debts within 1 year. We have current ratio, current assets divided by current liabilities. And then we want to utilize something as simple as vertical analysis, doing a percentage off the base amount. So if we have our income statement, we have $5,000 in revenue, but our cost of goods sold, our COGS, is $3,000. Well, that's 60% of our revenue. And then it's going to sort of trickle down. We're going to figure out, our overall net profit or loss. And then we want to figure out, is that okay? Is that what we expected? And be prepared for, the plethora of questions. How can we improve? We can't because of this, because of that. Get ready for that analysis. Doing something as simple as horizontal analysis. We take two years and compare operational expenses. We get to the end of 2025 and we compare it to 2024. We take that number minus 2025. The difference divided by 2024, that's going to be your percentage change, percent change formula. Again, if we increase by a certain percent, All right, did we expect that? Is it okay? Is that what we want? What can we change? Get ready for questions like that and then analysis like that. If a mistake is made, um, we get to the end of 2025, it's closed out. 2026, a December utility bill wasn't paid. A number of options, but it seems as though you want to debit retained earnings, credit utility payables, debit utility payables, and then credit cash. And then get ready for that conversation because either way, it's going to affect overall profit. And then all companies do things differently, of course, whether quarterly, but at the end of the year, you're going to close out your temporary accounts, revenue, expenses, dividends. I'm a big proponent of offsetting to the income summary, keeping that as a placeholder so we can do one final sweep to retained earnings. Let me move over to software. My experience has been mostly in ERP systems, enterprise resource planning systems like Yardi, JD Edwards, Dynamic 365. And in my humble opinion, I think all accounting software systems are pretty much the same. If you can handle ERP, all other systems shouldn't be that hard. And if you ever get stuck, go onto YouTube University, get a tutorial, be a problem solver, figure your way through it. But you have to follow the basic accounting rules still. We still need our assets to equal our liabilities and our equity. And I liken it to, traveling in different cities. Driving in Los Angeles is different than driving in Atlanta. But you follow the same rules of the road. But then you just have to get to muscle memory. And then once you get to muscle memory, then you're able to whiz in and out of traffic and get to where you need to get to. Let me talk about Excel. The three main areas of Excel that are commonly used in accounting are pivot tables, VLOOKUP, and if and statements. And I would say some ifs. And let me focus on some ifs because I think that's the most advanced. In my humble opinion, if you can do some ifs, all the other ones shouldn't be that difficult, to which I have experience as well and knowledge. So let's say, especially when it comes to national accounts, we have certain amount of data that's downloaded every month. Let's say we want to know what each state sold each product at, the beginning of the month, middle of the month, end of the month. But they sold other products and other states did. So you just create a table off to the side and say, okay, equal sum ifs, use your parentheses and commas correctly. Let's compare this column of the quantity that we sold against the states, the product product that we sold, put that value in here, compare it to the states, put it in here, so that at any moment I can just go and say, okay, Montana, product 1, 2, 3, 4, I get the total. So that makes things a little bit more easier. So that's on a 10,000 foot view, my accounting skills and knowledge. Thank you very much for taking the time to hear me out. Have a wonderful day. Thank you.